I have a question. Who insures the insurers? Who does the insurance for the insurance companies? It's crazy, but most of the people would never ask themselves this thing. But how come? Like, how can an insurance company be able to afford paying out billions in claims when we have massive losses coming from natural catastrophes such as hurricanes, earthquakes, tsunamis, all of those things? It's crazy, right? It's a huge sum of money that comes from those things. And if they are by themselves, it's potentially going bankrupt or insolvent. So that's when we have, you know, the reinsurance participation on the whole industry, saving the whole industry from a breakdown. That's basically why we have reinsurance agreements. That's why they are very important to the function of the financial industry. They are essential. So if you think of it, um, reinsurance is exactly what it sounds like. It's just insurance for insurance companies, right? So to protect themselves, insurers transfer part of the risk they take from the policies they write to the insurance company. What the reinsurance companies would ask in exchange to this protection? Part of the premium. That's pretty much how it works. That's the basic, right? So without the reinsurance, most insurance companies wouldn't survive these major catastrophe events that I just, highlighted a few here. So why reinsurance exists? Let's use an example. Imagine a small insurer in Australia that provides coverage to homes in the northern Queensland area, which is very, susceptible to cyclones, for example. In a category 5 storm that hits and damages 10,000 homes, the insurer would, might have to pay out hundreds of millions in claims. That's a financial nightmare, basically, right? For a company operating mostly in that particular region. But if the insurer had reinsurance, part of these losses would be covered by a global reinsurer, such as Munich Re, Swiss Re, and SCOR. They have a global presence. There are massive international companies that specialize in manage extreme risks, such as those ones. By spreading those risks across the globe, across continents, markets, and different types of insurance, reinsurers create stability in the system. So, in short, reinsurance keeps insurers safe, and that safety keeps the whole economy functioning. Now, how reinsurance works. I'll cover the basics, and it's very basic. It's really easy to understand. When you go to the practice, it has like a lot more details into the treaties. It gets a bit more complicated, but if you stick to the basics, you will always understand it. So I will highlight two types of reinsurance treaties, the most common ones: the excess of loss and the quota share. So quota share, proportional, is basically a proportional agreement on the share of the premiums and the claims. Meaning, when the insurance company sells 10 million in policies for that particular, in the sum of total policies, they write $10 million, and they have a quota share agreement with the reinsurance company that they will share 50% of the premiums and the losses. So 50% of those premiums meaning 5 million, is going to be transferred to the reinsurance company. In case any claims, any sum of claims from those policies happen, 50% of everything will be covered by the reinsurance company. That's very easy. It's 50% in whatever happens, premiums or claims. Paying or receiving money, 50% is the share of the reinsurance company. It's just a partnership, I would say. That's proportional reinsurance. When we say non-proportional reinsurance, what comes to mind is excess of loss, meaning the insurance company say, all right, up to that level of losses, let's say $10 million, I am fine, I can pay it myself. But if it goes beyond that, if it goes to 20 million, then I want the reinsurance company to come and help me paying this. Everything above the 10 million, the reinsurance company is in charge to pay. And that's when we have, the safety net. So they are here to help out managing the portfolio and the cash flow. That's how those things really work. What else would I say? So how they make money, right? Because they are there to cover and to help out the insurance industry, taking on this whole lot of risks. How they make money? So there are a few ways. So first is by collecting premiums from the risks they are exposing themselves. They take risks from the insurance companies. They receive money from those risks they are taking. That's one. Second one is from investment portfolios, right? If you think of it, if those reinsurance companies are global and they have huge sums of cash, this cash is going to be invested somewhere, or they are spread all across the globe. So they will have huge sums of investment returns coming to them, right? So that's pretty much how they make money. And, they rely heavily on statistical modeling. That's crucial for them because they deal with this large exposure to claims. They have to be very good at modeling. So they are very good at data, managing data and analyzing everything they collect. They have to be because they are huge and the risk is there. Their work is getting risk from the risk takers. That's pretty much what they do. And that's basically how they do it. So they rely heavily on the actuarial science to do everything from collecting the data and analyzing everything and pricing their products to sell to the insurance industry. So why should we care about reinsurance? As a finance professional, you should know about it because finance is not only about, profit and balance sheet. Well, because it impacts almost every part of the financial system, right? Every part of the financial system. They are this balancing act. They are there as a safety net for all the financial system. So when reinsurance works well, your local insurer is going to reflect this in the insurance that you're paying to use. Let's say your car insurance, your home insurance, they're going to have a better price than when the reinsurance companies are doing bad, because they will pass the price to the insurers. The insurers, will raise the price. Will have to raise the price to the policy holders. They will not take on the price to themselves. So we, they are buying retail insurance, will pay more if the reinsurance is going bad. So that's a good thing to call out. And that's exactly what happened in Australia and other parts of the world too. Most frequently, like in a few years back, it was tracking very bad, and the insurance costs went up for everyone else to pay. So even though you may never buy a reinsurance policy yourself, because only insurance company would buy them, it really impacts our daily lives. It's just on a bigger picture now. Beyond just business, reinsurance plays a vital role for global resilience. It helps economies recover faster from disasters. It allows governments to share risks through public-private partnerships, and ensures that when tragedy strikes, financial aid flows quickly where it's needed the most. And on a more personal level, as finance professionals, understanding reinsurance gives us perspective. It reminds us, as I said before, that it's not only about profits and balance sheets. It's about building systems strong enough to absorb those kinds of shocks, right, that comes with those events, and keep society moving forward. So to sum up everything, next time you hear about $1 billion natural disaster, remember this. Somewhere behind the scenes, there are many reinsurance companies working to spread the loss across the world, making sure one company or one country doesn't have to bear it alone. So that's the beauty of reinsurance. It's not flashy, it's not well known, but it's one of the quiet forces that keep the global economy standing tall after every storm. And that's all about it today, guys. That's a bit about reinsurance. I hope you guys enjoy it. If you have any further questions, just drop down in the comments below, and we go from there in our discussion, in our conversations, and sharing what we know about things that I pop up with. And to make sure you're in line with all the content that is dropping in this channel, make sure you click the bell button, you subscribe to the channel, and like it, please. Help this little guy here. All right, so I'll see you next video. Stay in peace, stay safe, and I'll see you in the next video. Bye.